Listen carefully. The world might be closer to a major geopolitical conflict than most investors realize. While the media focuses on headlines about Iran, retaliation, and military escalation, something much bigger is happening behind the scenes. Smart money isn't panicking. They are positioning. Because every major global crisis in the last 30 years has created one thing: the biggest wealth transfers in history. And today, the battlefield isn't just oil or gold anymore. It's Bitcoin, artificial intelligence, and energy infrastructure. Tonight, I'm going to show you why global banks are suddenly embracing Bitcoin, why a massive liquidity wave is about to hit markets, and why one overlooked company could become the biggest AI infrastructure play in crypto mining. Welcome to PreyoPromo. This is the market intelligence you need before the next move begins. Global risk update. Right now, geopolitical tensions are sitting at extremely dangerous levels. Diplomatic negotiations are happening in Vienna. At the same time, intelligence reports suggest possible military escalation between the United States and Iran. Now here's the part most investors miss. Markets hate uncertainty, but they price in conflict extremely fast. We've already seen safe haven demand increasing, oil volatility rising, and global investors rotating into alternative assets. And one asset benefits the most from global uncertainty: Bitcoin. Why? Because Bitcoin is the only global financial network that never closes. Stocks close. Banks close. But Bitcoin trades 24 hours a day, 365 days a year. When panic hits traditional markets, liquidity often flows into digital assets almost instantly. Macro liquidity injection. Now, while everyone is watching the geopolitical headlines, something equally important is happening in the background. Fiscal stimulus. Government spending programs are preparing to inject hundreds of billions of dollars into the global economy. Whenever liquidity enters the system, it has to go somewhere. Historically, it flows into three places: equities, technology, and speculative assets. And right now, the intersection of all three is AI and crypto infrastructure. That brings us to the institutional shift. Institutional adoption. One of the biggest developments recently came from Citibank. For years, traditional banks treated Bitcoin as a speculative experiment. Now that narrative is completely changing. Large financial institutions are beginning to build Bitcoin lending platforms, crypto custody services, blockchain settlement infrastructure. This is a massive shift, because when banks start integrating Bitcoin into their financial systems, it transforms crypto from a niche asset into financial infrastructure. And historically, infrastructure plays create the biggest investment opportunities. MIDI video CTA. Quick pause for a second. If you're serious about crypto investing and you want daily market signals, research reports, and trade setups, check the link below and join the PreyoPromo Inner Circle. Inside, we track whale movements, token analytics, and early-stage opportunities before they trend. There's a free trial available right now. If it doesn't help you make better decisions, you can leave anytime. Now let's get back to the market breakdown. Bitcoin technical analysis. From a technical perspective, Bitcoin is currently sitting in a consolidation phase. The key level traders are watching right now is the 20-day exponential moving average. Recently, price attempted to break above that level but was rejected. That tells us something important. The market is waiting for a catalyst. Volume has been declining. Volatility compression is forming. And historically, when Bitcoin enters this kind of compression phase, the next move is usually very explosive. The key breakout level to watch sits near $69,000. If price breaks and holds above that region, it could trigger a momentum rally fueled by algorithmic trading and short liquidations. Until then, the best strategy is patience. Professional traders don't chase every small move. They wait for confirmation. AI infrastructure boom. Now let's talk about the most important technological trend in markets right now: artificial intelligence. Training AI models requires enormous computing power. That means data centers, energy infrastructure, and high-performance hardware. Interestingly, one of the industries best positioned to provide this infrastructure is Bitcoin mining. Why? Because miners already operate massive facilities filled with power systems, cooling systems, high-density computing hardware. And that leads us to the company many investors are ignoring, Marathon Digital Thesis. The company I'm watching closely is Marathon Digital Holdings. Ticker: MARA. Historically, MARA has been known as one of the largest Bitcoin mining companies in the United States. But the company is now pivoting towards something much bigger: AI infrastructure. Recent partnerships indicate that portions of their mining facilities could be repurposed into AI data centers. This is extremely important, because AI computing demand is exploding globally. If Marathon successfully transitions part of its infrastructure into AI services, the company could capture two massive revenue streams: Bitcoin mining and AI compute. Valuation opportunity. Here is where the opportunity becomes interesting. At current prices, the company's market valuation is close to the value of the Bitcoin it holds on its balance sheet. In other words, the market may be undervaluing the AI infrastructure potential entirely. We've seen a similar transformation happen before. Companies that pivot successfully into AI infrastructure have experienced explosive growth. In some cases, seeing stock prices increase tenfold or more during early adoption phases. Final strategic outlook. So let's bring everything together. Right now, we are witnessing the convergence of three major forces: global geopolitical uncertainty, massive liquidity entering the financial system, and the rapid expansion of artificial intelligence infrastructure. Bitcoin sits directly at the center of this convergence. It acts as both a digital store of value and the economic engine powering the mining industry. And companies positioned at that intersection could benefit tremendously over the next decade. The biggest mistake investors make during uncertain times is reacting emotionally. The smartest investors step back. They analyze the macro trends, and they position themselves before the crowd realizes what's happening. If you found this breakdown valuable, make sure you subscribe to PreyoPromo for weekly deep dive market intelligence. And if you want access to our trading signals and research reports, check the Inner Circle link below. Stay sharp, stay disciplined, and I'll see you in the next market update.